All right, folks, we're live here, maybe a little bit of delay going on, and it is Unenjoyment Friday. This is Spotting the Trade, folks. My name is Eric Wilkinson. You're with Pro Trader Strategies right now. I'm here going to talk about economic data, see how that's impacting the markets, and then talk about some option strategies that we might be able to implement into our portfolio based on those assumptions we come up with there. Hey, and if you get a light bulb moment, folks, please smash that like button for me. It help out. I am right here in front of the Veterans Memorial. It is a memorial for all of the armed services. Really pretty cool airplane back there in the background. All of these pillars will light up and signify different things. They can make the American flag look like the black and blue kind of flags, so they can make this all change colors for different situations. So it's pretty cool when the lights are turning on. We're getting the sun coming up here in the background, so it should light it up a little bit better. All right, without further ado, let's get on with the overall market. Something that we've been seeing here is the ISM, which is the Institute for Supply Management. We got out earlier this week, was better than expected. It wasn't better than expected, but it was better than 50, which is expansion in the overall economy. JOLTS jobs opening, some of the other jobs numbers we were getting earlier on this week were showing that the employment picture was looking pretty good, but we got the real non-farm payroll number. The unemployment number was what we used to call it on the floor because it was such a crazy day. Well, that number came in, and we were expecting 426,000 with a really good revision to the upside. Some folks were even saying last month's revision should be revised up close to 1 million. Well, we didn't even get close to that, folks. We got 250,000 last month. That was the revision up to 250,000. This month we were expecting 426,000. How many do we get? Well, less than 200. All right, so a big miss on that number. This is following the Fed being very hawkish on the interest rates. We've been seeing them talk this week, and they were saying interest rates are probably going to rise. Some folks pricing that into the Fed fund futures into March. I don't think we're going to see that, especially with these economic data we're getting here with the non-farm payrolls. I know that businesses are struggling to hire. Everybody I'm talking to is saying that they are trying to do anything they can get people in there working. That means wage inflation, folks. That's because if you have to struggle to get an employee to come work for you, that means you're probably going to have to pay them a higher wage in order to get them to stick. A lot of these folks that have been working through this time have seen 4 and 5% increases in their incomes because they're jumping from job to job quickly. So that's something that we're starting to see a lot of. These folks aren't sticking around for more than probably 6 months to a year before they're jumping onto another job. So that's going to drive wage inflation going forward if we continue to see that kind of stuff. And which is really strange because of these unemployment numbers being so low. So it's really a balancing act here between wages and the folks' willingness to work. You're going to have to pay them enough. That cycle there was a little bit difficult sometimes. All right, let's get on with the overall markets. I've chatted enough here about that. We got the Nasdaq over here. You know, Nasdaq was the one that was leading us to the downside. I talked about this coming into 2022, is that on any type of pullback, we were likely going to see here in the Nasdaq really have that pullback more often, or at least more exacerbated to the downside than we probably would in the Dow Jones Industrial Average, which has come to fruition. We have seen more of a correction really here in the Nasdaq the past few days, especially coming in 2022, as that window dressing that we were talking about really got put on in the tech sector. Jones has not had that kind of move to the upside there. We also have crude oil, is what I'm starting out with, crude oil here. We're seeing prices across the board creep a little bit higher. A lot of this is due to the lack of supply, not really seeing the demand from the manufacturing sector. Well, this is one of those slow things, how this is streaming for you folks. But again, crude oil has been making those moves to the upside. I think today the tantrum or the taper or this taper tantrum that we saw the last few days off the Fed, talking about these interest rates slowing down on the asset purchases, all of those things that I've talked about that have been driving the bonds lately, or at least supporting bonds. Without that, Fed is going to come in here and support it. We've seen this off. Now, I've just recently done videos on how this is affecting your portfolio. A lot of you folks out there are probably waking up this last couple of days, looking at your overall portfolio and seeing, well, hey, my stocks are doing pretty bad, but my overall portfolio is down more than what my stocks are showing. And that's probably because actually the bonds here, as that bond price goes down, interest rates go higher, but that bond price is what's being reflected in your portfolio there. So it's going to start looking a little bit more ugly on that. Now, with the tech sector, NVIDIA, I should have probably seen coming. We have on 1x2, or at least I am on 1x2 here. NVIDIA, it has had this correction, but the beauty in setting up the 1x, like I did in the videos and give you guys the guidelines there, is that even this pullback, because of the 1x2 collecting a credit, I'm still in positive territory. So with this correction, yeah, I'm not as happy as I was a couple of days ago, but I can still have the time in order to be right with this trade. And if it doesn't ever really correct back to where I want it to, then I'm okay with that because I collected a credit at the beginning. All right. So that's about it for today. No cards here other than maybe if you can't take, I'm going to use can't take that, take it easy. Anyway, I tried. You guys have a great weekend and we'll see you next week. Make sure you guys check out that video also that I just did yesterday on the Oso Loco. Okay. It is the double bear spread or the crazy bear. So check that one out. That's a great strategy for a directional assumption. You eliminate any type of debit you would pay for it. We get a credit, a risk one, make one on a defined risk strategy. Pretty cool. So please check that out. And before you go, make sure you guys are subscribing, hitting that little bell right next to it, because yes, I am unannounced today. Make sure you guys have that indicator on so that you guys can participate in these. All right. You guys have a great weekend. Bye for now.